expectations there is that it would have risen to 2% from 1.7%. And it'll be interesting at 2:30 when that figure does come out to see what the market reaction would be. But I suppose we will have cautious trading even thereafter in anticipation of what the Fed will be saying next week in terms of as far as quantitative easing is concerned, as far as the future of the United States and the perceived direction that the market is going, and whether there is a recovery that is happening, whether the recovery is really happening.
Do you think the growth figure we see this afternoon, of course you mentioned a figure of growth of 2%, do you think the extent of the growth we see could influence the extent of quantitative easing that the Fed announces at that meeting on Wednesday? Because if we get growth surprising to the upside, would we see less quantitative easing?
Yes, I think we would see some kind of adjustments that the Fed would make depending on where depending on where their GDP numbers are. But I think also the growth there, the growth story there is troublesome because it's not creating jobs and they're not creating employment. So I think what they're trying to do with quantitative easing is spurred on so that the entire economy is recovers, and therefore jobs are created and employment numbers start to go up, and therefore make it a more sustainable recovery. So I think they have that objective in mind rather than managing September quarter GDP figures. I think it's just to build a sustainable recovery in the economy, and and I think what the quantitative easing measures that they will employ will be dependent on that. And I see also that US yields have shot up a little bit in anticipation of how these figures the GDP figures will affect the Fed's decision next week.
Of course, we had those jobs numbers out yesterday, initial weekly jobless claims, and they appear to be a little bit better. So we are starting to see a positive trend coming through in the jobs market, but still nothing that's going to dent that very close to 10% unemployment rate in the US.
Yeah, I think the weekly numbers is a little bit misleading at times, and it's a little bit too erratic to put too much weight on it. The non-farm payrolls that come out at the end of the month would be what we would focus more, as well as the actual unemployment rate in the United States. But yes, it has been a good trend so far these past 2 weeks, I think, or past 3 weeks for the non-farm payroll number. But I think, it's still a very, very far way to go until we see real growth in terms of employment in the United States.
Of course, we had some data out here this morning. We had private sector credit extension numbers also slightly better than expected. And again, it's mortgage advances and the consumer who's driving this rather than businesses.
Yeah, I think the household sector is a little bit above target at the moment, but installment sales credit continues to recover. Leasing finance is a little bit under pressure, as well as we've seen a bit of growth, as you said, in the mortgage finance side of things, and I think that number was a good surprise for our market, 4.42% versus previously 3%, and what it really shows is that the consumers perhaps through the low interest rates environment that we have in this country have been able to start to pay off debt, have been able to start to spend in the economy and start to grow the economy a little bit. But it's still the banks are still reluctant to not reluctant, maybe cautious to pass on credit, but at the end of the day, we have seen a very good recovery in the private sector credit extension number.
Well, to what extent will that recovery we're seeing for the consumer counter the debates for an interest rate cut? Because, of course, we had CPI out on Wednesday, PPI out yesterday, both of those coming in lower than expected, and there is growing pressure on the Reserve Bank to cut rates, but we are seeing that demand starting to come through. What's your view on that?
Well, I think this number will not have that much an effect on the governor's decision whether to cut rates or not. But I think what more influences the governor is that we've got a strong rand environment. We've got not weak, but low inflation, but it's still within the target range. And also, we've got a weak economic recovery still. So those are the factors that the governor would look at. And I think right now it's that, the economists are saying that no, they're not expecting a rate cut this year. Traditionally, the Reserve Bank would not cut towards the end of the year, whereas traders are somehow pricing in a 50 basis point cut in November, or perhaps even some are saying 25 basis point cut in November. But so we'll see. And also the other argument is, if not November, perhaps then more likely January we will see a rate cut.
Of course, we had a Massmart recovering quite nicely today. This share was down 2.8% at one point yesterday, closed 0.5% lower. It's recovered that again today. And this really followed news yesterday morning that Walmart is probably only going to buy 50% or just over 50% of Massmart. It looks like as the market's digested that news, it's actually welcomed it.
Yeah, I think they've welcomed it. I mean, the last time I checked, it was still slightly down, but I think that's in line with what the general market is doing. And I think it was a welcome, concession on the part of Walmart that they're going to take about 50% off. And I think the stakeholders had a lot to do with that. Perhaps the government stepped in there. I don't know, but it is welcome that they're still going to be bidding for Massmart, and that the actual transaction is still going to go ahead, but it would protect the consumers, the South African consumer, the South African workers, and the South African share in and of itself.
And of course, it does also mean that South African investors can participate on any benefits that accrue to Massmart with Walmart as a parent company, doesn't it?
Yes, absolutely. That's exactly what I mean when I say it's benefit to the share in and of itself, because the South African investor can then access that share still. I think before they were planning to maybe delist it, and now it seems like all likelihood that that will not happen. So I think a great concession on Walmart's part, and the market has received that very well.
We have gold shares, though, really leading the way up today. Goldfields up by 1% just a short while ago. And, of course, Harmony Gold, Anglo Gold also up. And that's despite the gold price easing back a little bit today. Of course, we have got the rand still trading around that 7 rand level against the dollar.
I think initially what we saw was that the gold stocks were catching up to the gold price. It did open up a little bit stronger, but I saw a little bit earlier that it has come back a little bit. Perhaps Goldfield not so much, but as Harmony and Anglo's, but they has come back. And then we saw some results previews from Anglo's as well as from Goldfields. I think the strong rand will affect their earnings as well as and also offset any benefits they would have gotten from a higher gold price. And also they had to deal with higher costs in terms of electricity and wage increases. And I think perhaps what we've seen there, why they perform a little bit better, is strictly because the rand has come back a little bit, and so that has benefited the gold shares.
And Ntombenhle, just going into next week, do you think we're going to see this caution prevailing until we get that announcement out of the Fed on Wednesday?
Yes, I think we're expecting a lot of caution, a lot of economic data, or let me just say central bank speaks, a lot of central banks speak next week, like the BOE, and we've got the Fed decision on Wednesday. So I think there will be a lot of cautious trading, but then thereafter there'll be a very big market reaction just to either spur the market up as we anticipated there would, or to actually just readjust back down to more comfortable levels.